10,000 shares of rupees 10 were issued at par. The money was payable in the 3 installments of 3, 5 and 2. One shareholder holding 500 shares couldn't pay first call money and his shares were forfeited. And out of these shares, 400 were reissued at rupees 7 each as fully paid up. Fully paid up means the full capital of 10 will be credited to him, but the money will be received only 7 rupees. Let's have a look at the features of this question. These shares have been issued at par and the whole of the shares have not yet been issued because shares were forfeited 500 but reissued are only 400. It means the company is still looking for a person who can buy 100 shares from this company. So these are called partly reissued shares. So the journal entry for the forfeiture will be share capital account debit to share forfeited account to share first and final call account, and that is 500 into 10 5,000 rupees, to share forfeited 4,000 rupees, to share first call 1,000 rupees. Very simple journal entry. Then the journal entry of reissue for 400 shares, bank account debit to share capital, and for discount we have to debit share forfeited account, that is 400 into 3 1200, bank account debit 400 into 7 2800 rupees, and to share capital 400 into 10 4000 rupees. So I have already told you, whenever the all of the shares are reissued, share forfeited account must be closed. But in this situation, all the shares are not yet reissued. Only partly shares are reissued. So we have to close share forfeited account partly, not fully. So now the question is, how much money will be transferred to capital reserve? And the journal entry for that is share forfeited account debit to capital reserve account. So let's see how the shares are split into two parts. Shares forfeited 500, reissued 400 and remaining 100. It means forfeited shares are split into two parts, 410, and the ratio is 4:1. In the same way, the share forfeited amount will be split in the same way, means into 4:1, and that will be 3200 and 800. Means the total share forfeited money is 4000 and reissued was 3200 and the remaining is 800. So we can close only 3200 rupees. Means out of 3200, 1200 has been used. So the capital reserve will be 3200 minus 1200, 2000 rupees. It might be a bit confusing for you, so I give you the shortcut. When the shares are partly reissued, you can apply the formula and that will be quite easy for you. And you must write the formula in your rough copy 2 or 3 times so that you can memorize it. And the formula is share forfeited credited into reissued shares upon forfeited shares. You can put it in the bracket and then minus share forfeited debited. Share forfeit credited means whatever you have credited. In this situation, you have credited rupees 4000 into reissued shares, that is 400, upon forfeited shares, that is 500. It means 4000 into 400 upon 500. Put it in the bracket, then minus share forfeited debited, means debited at the time of reissued. How much you have debited? That is 1200. So it will be equal to 3200 minus 1200 is equal to 2000 rupees. The same thing I have done it. So whenever the shares are reissued but partly, you must remember this formula and it will help you a lot. 10,000 shares of rupees 10 at a premium of rupees 2 were issued and the money was payable in 3 installments, 3 plus 5 plus 4, and the premium money was included in the allotment. One shareholder holding 500 shares couldn't pay first call money and his shares were forfeited. Out of that, 150 shares were reissued at rupees 6 each as fully paid up. So let's have a look at the features of this question. Number one, the shares have been issued at premium and the premium is included in the allotment, and the defaulter has paid the allotment. Allotment paid means premium paid. In this question, the premium is paid and paid premium cannot be reversed. And number two, only 150 shares have been reissued. It means it's a question of partly reissued shares. So we cannot close share forfeited account. So general entry for the forfeiture: share capital account debit to share forfeited account to share first and final call account. And the amounts will be 500 into 10, 5,000 rupees, 500 into 6, 3,000 rupees, 500 into 4, 2,000 rupees. In this question, securities premium is not debited because it was paid, and share forfeited has been credited only 3,000. The reason being, the company has taken 3 on application and 3 on allotment. Although the company has received 5 on allotment, but that includes a premium of rupees 2. In share forfeited, purely capital money is credited, means capital money received is credited. So the company has received 3 plus 3, 6 as capital. So that has been credited. And to share first call, that is 500 into 4, 2,000 rupees. Now be ready for the reissue. Bank account debit to share capital account and share forfeited account debit. Because 150 shares have been reissued, so share forfeited will be debited 150 into 4, 600 rupees. Bank account debit 150 into 6, 900 rupees. To share capital 1500, means 150 into 10. Now share forfeited account debit to capital reserve. Whenever there is reissue of shares, whether partly or fully, capital reserve must be credited. But in this situation, we cannot close share forfeited account. So I am going to apply the formula that I have already explained you. That will be share forfeit account credited 3,000 into reissued shares 150 upon forfeited shares 500. Put it in the bracket minus share forfeited account debited, that is 600 rupees. So it's equal to 900 minus 600 is equal to 300. So share forfeited account debit to capital reserve 300 rupees.